Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra and with me is Reema Tendulkar. A lot of stocks in focus. The markets, they have come off from the highs of the day. We have the Nifty sitting with cuts of 43 points at the day's low. But the mid-cap side of things, they are looking good. As we speak, that particular index is up 96 points. The Bank Nifty too is quite resilient. So that one is up 0.3%. But it has come off from the highs of the day and we have earnings that are coming in as well. But let's do one thing. Let's talk about the first corporate that is in focus today. It is Marico. The FMCG major reported largely flat margin and a weaker growth outlook. The stock is down over 7% in trade today. Mangnam Malu caught up with Saugata Gupta, who is the MD and CEO of the company, and began by asking about the quarter gone by and how the company sees demand pan out over the coming quarters. Listen in.
I think we were more or less in line with street estimates. Having said that, two things happened. One, contrary to expectations, the commodity market, at least as far as Parachute is concerned, continues to fall in a gradual manner, which means that we were always playing catch up with pricing. As a result, our prices have not been able to stabilize in the market. And as you know, that Parachute is a mass distributed brand, therefore it takes 6 to 8 weeks for the prices to stabilize and the price discovery to happen with the consumers. And therefore, we have not been able to get the volumes back, which I believe now is going to happen come around November, December, certainly around December, because now we see the stability happening. In addition to that, I think there are two more issues. We had a one-time cost which we had in Saffola, which was required to get the volumes back in place, and we are now getting the volumes back in place after a disappointing first quarter to get the prices. And as you know, we covered the ground stock and we covered the high cost stock in terms of the pricing, which was a one-time loss in terms of the profitability. In addition, obviously, in spite of the resilient performance in some of the international markets, there are some forex issues. And plus the EBITDA to PAT, there is an increase in effective tax rate. So given all these, I think there was a slight, I would say that I don't think it is in line with the market. It is in line with how the category is playing. And the fact is that our diversification strategy is very much in place. Food continues to grow aggressively. The international business is very robust, and as well as the entire digital business. So I think we should be back. We have already had a swing in volume growth. We are in positive territory, and we at least expect to give a mid-single-digit growth in the Q3 and moving forward.
Right, mid-single-digit growth in the second half is what you've guided for already. Will that be equally distributed across Parachute, value-added, Saffola, or will some parts grow faster? I mean, can you give us a sense of how this will be spread across all your verticals here?
So I think it depends on the extent of the rural recovery. We are seeing, at least as far as urban is concerned, the discretionary part of the portfolio, the foods, and if you look at food is performing much better than some of the HPC categories. So it depends on some of the market, but we definitely believe that having stabilized Saffola, will be able to stabilize Parachute volumes in this quarter.
Right, and as far as margins are concerned, you've guided for 18 to 19% for the entire year. How stable or how confident are you of this? Because raw material environment still continues to be volatile.
So if we look at a YOY perspective, I think copra has settled down to a level which is far lower than last year. I think some of the increase that has happened in petro-based products, as I believe is priced in. And also we are seeing a little bit of a marginal decline in other vegetable oils. So having said that, and as you know, last year by Q4, the inflationary conditions are already set in. So if you look at it, I think sequentially we continue to see improvement, and we are extremely confident of delivering that 18 to 19% operating margin for the full year.
And what would the price growth according to you be in the second half of this year? I mean, volume led would be around mid-single digits. Trying to understand how much of that would be price?
So there will be marginal deflation that will continue. That will, I think, anniversarize sometime in Q1 of next year. And however, as far as international business is concerned, we continue to expect maintain the growth momentum and deliver double-digit growth.
Quickly on your growth businesses, food now, you have this aspirational target of 850 to 1,000 crores by the end of next year. Just wanted to understand, what is your current first half absolute revenue in the food business. And how much of this 850 to 1000 will come from the current categories that you're already in, and how much of that will be new categories? Because competition in this space is extremely rife. I mean, I was just speaking to Tata Consumer. Everyone's eyeing this space.
So I think, first of all, the food headroom for growth is very high. If you look at the packaged food penetration in India, it's extremely low. And therefore, I think food as a category has high potential. In addition to that, I think we are driving this through Saffola. I believe it's a very strong under-leveraged brand, and therefore the entire strategy is based on the total addressable market expansion through Saffola. If you look at the run rate currently in foods, we are clocking around 650, and we are extremely confident that we should be able to hit the 850 to 1000 crores. We have launched, if you look at our categories, I think, as you know, oats and masala oats is now attained critical mass. It's doing very well. We believe honey and the soya nuggets and the soya journey, we want to replicate just the way we did masala oats through value addition, is expected to 100 crores run rate soon, both the categories. And we expect to be at least in 2 more categories by the end of this financial year. So there is a significant innovation plan in foods. We are also open to looking at inorganic, and we are extremely confident of hitting the 850 to 1000 crore mark.
International as a proportion of your sales has increased, and that's largely because of your outperformance in Bangladesh, etc. Going forward, where do you think this will stabilize as a percentage of your overall sales?
So international has been a success story. I think if you look at both profitable growth, and I think the biggest thing about our international business is 7 consecutive quarters of double-digit growth is very consistent. It's not unpredictable. And what we have been able to do is to replicate the Bangladesh success into Vietnam, and now we are doing it in Middle East and North Africa. Our innovation success rate in terms of diversification of the portfolio in Bangladesh, in Vietnam, and now in Middle East has been pretty successful. So I think we are pretty confident of being able to deliver this, chugging along this double-digit constant currency growth. Yes, there are short-term headwinds in certain markets in terms of currency depreciation, some inflation, but given our current robust execution excellence and the portfolio, and I think we have done significant changes and have best-in-class leadership, we are extremely confident of delivering this predictable, profitable growth.
What is digital and premium current run rate at?
So digital is expected, we're currently at 250, but premium is hitting 300 plus. So I think that is exactly what we have done. If you look at a scenario post 2020 and now, we now have around a significant portion of anything between 1300 to 1500 crores of actually new business. And that has been the single biggest success of Marico in terms of a significant diversification of our portfolio.
That is the big, stock which is